Good afternoon, and thank you for attending the Jeopardizing Tax Exempt Status webinar. My name is Efat Walker, and I will be your host. I am the Managing Partner and Senior Consultant for Walker & Associates Consulting. We are a full-service accounting, tax, and business consulting firm located in Conyers, Georgia. This presentation consists of a total of about 27 slides. Currently, the meeting is in listen-only mode. I will present all 27 slides in about 20 minutes or so, and then I will unmute for questions and answers from the attendees. Please limit all questions and comments to only those questions of a general nature that relate directly to the content in which has been covered during this session. For any questions that you may have that relate directly to your nonprofit, please feel free to give us a call at 678-374-9408. We do offer a free 20-minute phone consultation. Let's get started. Jeopardizing tax exempt status. After an organization qualifies for 501c3 status, it must continue to act in the furtherance of its exempt purposes to keep its tax exempt status. In this lesson, we're going to discuss the top 5 activities that can jeopardize your tax status, and they are private benefit or inurement, lobbying, political campaign activity, activities generating excessive unrelated business income or UBI, and failure to comply with the annual reporting obligations. Private benefit. Some of the activities that relate to private benefit are absolutely prohibited, while others are restricted. 501c3s must avoid all activities that will benefit substantially the public interest of any organization or individual. Instead, the 501c3's activities must serve a public interest and not a private interest. Private benefit and the concept of inurement are closely related concepts. Now, this does not mean that a 501c3 cannot pay reasonable salaries to its employees or provide services to its constituents. However, it does mean that the organization cannot cannot be operated for the sole purpose of providing a substantial private benefit to an individual, or really any purpose to an individual. It is for a public purpose. Now, the concept of inurement takes the notion of a private benefit just a bit further. In this particular slide, we're going to talk about insiders. And the definition of an insider is a person who has a personal and private interest in the activities of the organization. Some of the examples of typical insiders in a nonprofit organization may be the officers, directors, or even key employees. The IRS Code Section 501c3 states no part of an organization's net earnings may inure to the benefit of a private shareholder or individual. Now, this means that a 501c3 organization is prohibited from allowing its income or its assets to accrue to insiders. Examples of prohibited inurement may include paying dividends or unreasonable compensation to insiders and transferring property to insiders for less than fair market value. The prohibition of inurement to insiders is absolute. Any amount of inurement is ground for loss of tax-exempt status. In addition, the insider involved may be subject to excise tax. In contrast, if the activities of an organization privately benefit someone who is not an insider, that benefit must be substantial in order to jeopardize the organization's tax-exempt status. Prohibited inurement or private benefit does not include reasonable payments for services, other payments that further the tax-exempt purposes, or payments for the fair market value of real or personal property. In this slide, we're going to talk a bit about lobbying. Lobbying is activity designed to influence legislation. A 501c3 is attempting to influence legislation if it contacts or urges the public to contact a member or employee of a legislative body to propose, support, or oppose legislation, or if the 501c3 advocates or opposes legislation. If its lobbying activities are substantial, a 501c3 may fail the operational test and risk losing its tax-exempt purposes. The IRS uses 2 tests to determine whether lobbying is substantial: the substantial part test and the expenditure part test. we're going to talk a little bit about the substantial part test in this slide. The substantial part test reviews all of the facts and circumstances. This test considers a variety of factors, including but not limited to the time that both compensated and volunteer workers devote to lobbying, the expenditures the organization devotes to lobbying, meaning how much time and money was spent on lobbying from both paid and volunteer workers. Under this test, a 501c3 conducting excessive lobbying in any taxable year may lose its tax-exempt status and may be subject to an excise tax equal to 5% of its lobbying expenditures for the year that it lost its tax-exempt status. In addition, a tax equal to 5% of the lobbying expenditures for the year may be imposed against the organization managers who agree to making of such expenditures, knowing that they will likely result in the loss of tax-exempt status. So what does that mean to the board and the managers and owners? I'm sorry, not an owner. Again, nonprofit organizations do not have owners. But what does this mean for the individual that had the responsibility of oversight? This means that they too will be subject to a tax, a 5% tax equal to the percent of lobbying, which could be imposed against some managers of organizations who allow this to happen. In other words, you're just as guilty if you sat back and you allowed this to happen knowing that it was prohibited. Expenditure test. Instead of the substantial part test, the 501c3 may elect to have its lobbying activities measured using the expenditure test. This is known as a 501h election and is made using IRS Form 5768, also known as the election revocation of election by an eligible 501c3. Now, this option is not available to churches. Under the expenditure test, a 501c3's lobbying activity will not jeopardize its tax-exempt status so long as its expenditures related to that activity normally do not exceed an amount specified in IRS Code Section 4911. Now, under the expenditure test, a 501c3 that engages in excessive lobbying over a 4-year period may lose its tax-exempt status, making all of its income for that period taxable. Now, if the 501c3 exceeds its lobbying expenditure dollar amount in a particular year, it must pay an excise tax equal to 25% of the excess. Now, that's a lot. It could very well be a lot. So, just don't do it. Stray away from these types of activities when it comes to your nonprofit. You don't want the headache. Political campaign activity. Now, I know you noticed on the top of this page, I have an elephant and I have a donkey. And there's a big red sign over it. Prohibited sign. 501c3s are prohibited from engaging in any political campaign activity. Any. None. Zero. Either directly or indirectly participating or even intervening in any political campaign on behalf of or in opposition to any candidate for public office. Now, we should not see your nonprofit organization holding political campaign signs on the side of the road. Absolutely not. That is prohibited. This includes making contributions to political campaign funds or making public statements for or against the candidate. Now, the prohibition of political campaign activity is absolute. Any violation may jeopardize both the 501c3's tax-exempt status and its eligibility to receive taxable contributions. In addition, the 501c3 may become subject to an excise tax on its political expenditures. Now, when you think about political campaign activity as a nonprofit organization, I want you to think back to the ring that's on the upper right-hand corner of this slide. You're going to see the donkey and you see the elephant. Now, there's a ring, and they look like they are fighting. You, as a nonprofit organization, have absolutely no business whatsoever in that ring. Stay away from the ring, okay? Political campaign intervention includes any and all activities that favor or oppose one or more candidates for public office. Contributions to political campaign funds or public statements of position, verbal or written, made by or on behalf of an organization in favor of or in opposition to any candidate for public office clearly violate the prohibition on political campaign intervention. Other activities will require an evaluation of all the facts and circumstances to determine whether they result in political campaign intervention. Now, inviting a candidate to speak. This is an area where, quite a few nonprofit organizations don't really have as much clarity as they would like to have. I'm hoping that, in reviewing this particular slide and the slides following, that you will gain a thorough understanding of your rights and the rules as it relates to inviting a candidate to speak. A 501c3 may invite a political candidate to speak at its event. If it does, the organization must ensure that it affords an equal opportunity to political candidates seeking the same office. Meaning, if you, as a nonprofit organization, are inviting a candidate to speak and say it's a Republican candidate, that means you also need to invite the Democratic candidate that's seeking that same office, or any other candidates that are seeking that office, be it independent. It really doesn't matter. If you're inviting one, you must invite all. It does not indicate support for or opposition to the candidate. You have to be neutral. You are not allowed to, bring picket signs in there or whatever, campaign signs in support of either candidate. It must be neutral. And no political fundraising can occur. There are no collections going around the room for a candidate. You cannot use your 501c3 or your organization to further the agenda of any candidate, regardless of the office. It does not matter. You are prohibited from doing that. If and when a 501c3 invites a candidate to speak in a non-candidate capacity, for instance, when he or she is a public figure, the 501c3 need not provide equal access to all political candidates, providing the organization ensures that, now this is different, okay? The individual is chosen to speak solely for reasons other than candidacy for public office, meaning they can't bring up that they're running for office. No one needs to know that. If they're a public figure and they're coming to speak on a particular subject, they need to stay on that topic. The individual speaks only in a non-candidate capacity. Neither the individual nor any representative of the organization mentions the speaker's candidacy or the election. No campaign activity occurs in connection with the candidate's attendance, and the organization maintains a nonpartisan atmosphere on the premises or at the event where the candidate is present, and the organization clearly indicates the capacity in which the candidate is appearing and does not mention the individual's political candidacy or upcoming election in the communications announcing the appearance. In other words, you have invited a candidate to speak in a non-candidate capacity. Now this is tricky. You have to be able to first and foremost control the environment. If you have invited that candidate to speak, you must indicate to them and make it clear that they are not making a political speech. Whatever the specific topic is that they're going to be referring to, that's the topic that they must stick to. It will jeopardize your 501c3 tax exempt status if you allow them to go outside of that scope. Public forums. A 501c3 may invite several candidates to speak at a public forum. If, however, the organization demonstrates a bias for or against any candidate, the forum would be a prohibited political campaign activity. Again, that goes to being neutral, non-biased. The environment must be neutral and non-biased. If it's a political forum, it's open and welcome to all candidates, and you cannot show favoritism towards one over the other. The business activity. The question of whether an activity constitutes prohibited political campaign activity may also arise in the context of a 501c3's business activity, such as selling or renting mailing lists, leasing office space, or accepting paid political advertisements. According to the IRS, factors suggesting that a business activity would violate the prohibition include the following. The good, service, or facility is not available to the candidate on an equal basis. The good, service, or facility is available only to candidates and not to the general public. The fees charged are not at the organization's customary rates or usual rates. The activity is conducted only for the candidate rather than as an ongoing activity for the organization. Now, voter education, registrations, and drives. Now, we see a lot of these when campaign season kicks up. You see a lot of these. Now, certain voter education activities, including holding public forums and publishing voter education guides, are permissible if conducted in a nonpartisan way. Again, we're going back to that neutral, non-biased environment. If you're going to be involved in any kind of permissible political activities, it must be neutral and non-biased. Activities intended to encourage people to participate in the electoral process, such as voter registration and get out the vote drives, are also allowed if conducted in a nonpartisan way. It has to be conducted in a nonpartisan way. The prohibition of political campaign activity is not intended to restrict free expression on political matters by leaders of 501c3s who are speaking for themselves as individuals, but leaders of 501c3s must not make partisan comments in official organization publications or at official functions.
Failure to comply with reporting obligations. While 501c3s are exempt from federal income tax and unemployment tax, most of them will have information reporting obligations. Now, these are met by filing Form 990, 990EZ, or 990N. We can assist you in that process if you need additional assistance on ensuring that you meet those requirements. Since tax year 2008, almost all tax-exempt organizations, even the smallest organization that you could possibly think of, have an annual report or return or notice filing requirement. Only a few types of organizations, such as churches and certain church-affiliated entities, currently to this day still have no filing requirement. Now, failure to file. If an organization does not file for 3 consecutive years, its tax-exempt status will be revoked as of the filing due date for the 3rd return. If tax-exempt status is revoked on this basis, the organization must apply or reapply by filing Form 1023 and paying the appropriate user fee to have its tax-exempt status reinstated. If it can show reasonable cause for not filing, the reinstatement of the tax-exempt status may be retroactive. Questions and answers. We have reached a point in our presentation where I'm going to open up the floor to questions and answers. Please remember that you are to keep your questions, comments, and answers only to the content which was covered during this particular presentation. And if you have any questions that you have that relate directly to your nonprofit organization, give us a call directly at 678-374-9408. We would love to speak with you and also offer you a free 20-minute phone consultation. Thank you for attending today's webinar, Jeopardizing Tax-Exempt Status. Walker & Associates can assist you in the following as far as your nonprofit organization is concerned: incorporating your nonprofit organization, obtaining your EIN and business license, board development training workshops, policies and procedures development, as well as an array of other services which can be found on our website at www.wacaccountingandtax.com. We would love to speak with you about any concerns that you may have, or any services that you may be in need of. Give us a call, 678-374-9408, and we'd love to offer you a free 20-minute phone consultation. Thank you.